Hello and welcome to News Centre. I'm Parikshit Luthra. The 55th meeting of the GST Council in Rajasthan's Jaisalmer decided to hit the pause button as far as taking a call on reducing GST on insurance premium was concerned. Finance Minister Nirmala Sitharaman said that the group of ministers will take a look at the issue after receiving inputs from the insurance regulator. Remember, this has been on the high-profile GST issues that has been on the docket for over a year. States have also rejected a proposal to bring aviation turbine fuel under the GST ambit. This despite requests from the Aviation Ministry and the industry from time to time. The GST Council, however, did take a host of decisions. A GST of 18% will be applied on the profit margin when it comes to sales of second-hand small cars, including electric vehicles. This, however, applies to only registered dealers. Earlier, profit margins were taxed at 12%. Let's listen in to the Finance Minister.
Used EV, an individual selling to another individual, no GST. But if a company has bought EV, or if there is a regular registered used car seller who buys EV, does some propping up in it, adds value to it and then sells it, it was felt by states and it was felt by auto and many others also that the EV market is not so saturated as yet that used cars will come. Health insurance related GOM work also requires more time, so they have gone to take more time. On one or two specific grounds which I would like to put before you as to why it had to have more time, insurance and therefore the insurance regulator's input is awaited. IRDAI, the Insurance Regulatory and Development Authority's inputs have not come, so the GOM felt that it needed a bit more time. GOM में विस्तार से डिस्कशन हुआ है और हेल्थ इंश्योरेंस के ऊपर भी, लाइफ इंश्योरेंस के ऊपर भी, फिर भी और थोड़ा जानकारी उनको चाहिए। जैसे कि मैंने मेरे ओपनिंग स्टेटमेंट में बताया, इंश्योरेंस रेगुलेटर से भी उनको रेगुलेटर का गाइडेंस मिलना है, वो भी मिलने के बाद फिर फाइनलाइज करेंगे GOM, फिर आएगा काउंसिल में. There was this request placed on the agenda whether ATF, air traffic fuel, should be brought into the GST, because periodically we've had airlines telling us, civil aviation requesting us that ATF should be brought into the GST. It's not been agreed on. States did not feel comfortable. They didn't want ATF because they saw it as part of the crude petroleum diesel basket, and therefore they said that alone cannot be taken out, and therefore that continues to remain where it is today. There was also a suggestion just ATF could be put to a GOM so that they can think whether it is worthy of consideration to be brought into the GST, but they did not want anything done about ATF.
To take a deep dive into the decisions taken by the GST Council, we are joined by former Chairman of Central Board of Indirect Taxes and Customs, Vivek Johri, and also Mr. Najib Shah. Thank you very much, gentlemen, for joining us. Mr. Johri, if I can begin with you. A perception that is there after this meeting is that some of the things have been made unnecessarily complicated. How would you address those concerns from the industry, from the laymen and experts?
Thank you, Parikshit. And let me begin by saying that by and large, the Council has stayed course on trying to resolve contentious issues and disputes. And some of them were just mentioned in your program. And, these are issues where there had been disputes in the past, either because of investigations or audits or whatever, and there was lack of clarity. And the Council has chosen to clarify these issues, and in some cases even decided that if there's a higher rate of tax being imposed, then that should happen prospectively and not retrospectively. But yes, one or two issues, and I think what you have in mind, and there was quite a lot of reaction to that, where there has been a development which has unsettled businesses conceptually, in the sense that, whether this is the right direction and whether we are heading in the direction of simplifying the GST structure is, of course, the case of popcorn. But I think, in all fairness, what the council has done is to clarify the classification of these products. And they have then said that since it is classifiable under such and such HS code, which is what is used for classification of products under GST, then it will attract this rate. So the decision on the rate is kind of consequential. And I presume that as and when the group of ministers goes into the rationalization issue, they will take a call and try and broadband products, which are of a similar nature under the same rate of tax. So I think the clarification was only about the classification part, and the divergence of rates that it has given rise to is consequential. But by and large, if you look at issues like gift vouchers, penal charges levied by banks, packaged commodities, their definition, payment aggregators, there have been a lot of issues which have been clarified by the council.
Right. What I would also like to ask you, you spoke about rate rationalization. Now, the GOM report on rate rationalization, which is supposed to be submitted, that report has now been deferred till the next meeting of the GST Council. What do you think is the major issue here? There has been a need and call from the industry to rationalize the tax slabs, reduce them to 3. What is the major issue here and the difficulties that you've seen over the past few years?
So, Parikshit, I think the major difficulty is in trying to balance the revenue outcome. Because if you have to compress the number of rates, and you would recall that currently, you have 4 major rates, which are 5, 12, 18, and 28. And of course, there are some other rates which apply to a very small set of items, goods or services. If you have to compress the number of rates, then the rate of 12% has to go up. But the rate of 18 may need to come down, because if you recall, the revenue neutral rate that was worked out by experts prior to the launch of GST was close to around 15%. So if that unification has to happen, then and the drop of 18 to some middle level is going to cause a loss of revenue. The question is, how do you make up that loss of revenue? So I think that is one of the difficult parts of the exercise. The other part, of course, is to broadband goods and services into of a similar nature, so that they attract the same rate of tax and the disputes are minimized. So I think these are the 2 broad parameters where the group of ministers has to do a balancing act. And it's a complex exercise because there's a large number of goods and services that are going to be impacted by this. Then the third, of course, is a correction of inversions. And these inversions obtained in the textile sector, in the fertilizer sector, and 1 or 2 others. And these are also difficult to correct unless, these rates are compressed into fewer rates. Right.
Do you think it would be possible to arrive on any decision on rate rationalization by the next meeting of the council, or do you think this is something that may take more time?
I think it will take more time. At the next meeting, what I expect is just the presentation of the report, and then there would be a discussion, and I think it will require more time. I would be very surprised if the council is able to sort it out within 1 meeting.
Right. So you're saying that it would take more time. Now, the other important issue that the industry was hoping for an outcome on was GST reduction and exemption with regard to life insurance and health insurance. This issue, according to certain deputy CMs, needed more time. In fact, the Bihar Deputy Chief Minister, he was quoted by the FM as saying that he was one of those who had said that this needs more consultation, maybe another meeting. Now the IRDAI's inputs have also been sought. Do you feel that this was an area where consensus could have possibly been built up?
The problem, Parikshit, is most likely about the implication of giving a full exemption to these insurance products. The fallout of that is going to be that the input tax credit chain would obviously get disrupted if some of the products that insurance companies are offering are exempted from tax. So I think before a final decision is taken, and if the intention is to pass on the benefit of this reduction entirely to the consumer, then the council would have to take into account the implication of a full exemption on the input tax credit that insurance companies would otherwise have been able to neutralize. Otherwise, it would be a cost to them, the disruption in the input tax credit chain, which they would either have to absorb or pass on to the consumer. And if they choose to pass it on to the consumer, then the purpose of giving a full exemption may not be fully served. So I think this is one of the issues because of which this may require some time to go into.
Right. Mr. Najib Shah, thank you for joining us. Now, as far as insurance is concerned, we had experts on our program after the meeting on Saturday, and they all felt that this is a necessity when it comes to insurance, life insurance and health insurance, and these reductions should have been considered and decided upon. All the inputs are already there on the table. So what do you feel about what the GOM has already said against what the industry wants and the reasons for the delay?
No, obviously all the inputs are not available, which is the reason why, as Vivek rightly pointed out, a decision got deferred. I believe it'll take time. Every exemption, again, has been explained by Vivek, would mean a break in the chain. It would mean cost, and somebody has to bear it. So obviously there's a lot of lack of communication between what the industry thinks and what the government of India and the GM felt in the matter.
All right. So you feel that there is a lack of communication. And how do you think one can go about taking a decision and a balancing act between what the industry wants and what different state governments' view is on GST, on insurance policies, life insurance, term insurance, health insurance?
No, look, there is consensus that this is something which ought to be given. The modalities are being worked out. You have a GM headed by the Deputy Chief of Bihar. So I guess, again, by the next meeting, I think this is something which can be sorted out. I am not aware really what IRDAI has to say in the matter, because they are a critical player in the whole scheme of things. And again, like pointed out by Vivek, there'll be some costs which somebody has to absorb. And that's the reason why it has got deferred. So hopefully by the next meeting, we'll have a decision in this matter.
Right. Now, as far as the GST on electric vehicles, on used cars was concerned, now this is only when a dealer or someone is selling an old car or an old two-wheeler for that matter, and the GST will be only on the margin, that the difference between the purchase price and the selling price of an old vehicle. Considering the fact that we are trying to increase electric vehicle penetration in the country, do you feel that this category should have continued to be exempted from this 18% tax rate? Mr. Shah?
Well, I mean, look, it's irrelevant what really we feel in the matter. Quite frankly, that's a decision which perhaps it could have been taken. But having said that, it has been clearly brought out that it will be on the margin. Let us wait to see the notification itself and the final wordings in the notification when it does come.
Right. Mr. Johri, do you also feel that somewhere a clarification would be needed on how this higher rate of taxation on used cars, especially small cars, including EVs, will come into effect? For example, what about one person? Of course, it's said that one individual selling it to another, the tax does not come into effect. But in what cases will the tax come into effect? Will it only be on companies such as Car Deco or Mahindra First Choice, which are used car sellers?
Yes, so that is definitely one category which will bear the tax. The other category would be of corporates who are already registered under GST and who choose to sell, out of their stock of used cars. But I would like to point out that two things. One, if you recall in her briefing, FM was quite clear that I think the center was keen that the rate be dropped to 5% for EVs, for sale of second-hand EVs. I think I recall, that comment from FM. But the thing to keep in mind also is that since it is only on the margin of the reseller, the effective rate of tax is actually going to be lower than 18%. So rather than charging 18% on the full value of a second-hand car when it's sold, the tax is going to apply only on the margin of the reseller. And to that extent, there is an inbuilt abatement, in the provision. But like Mr. Najib Shah said, I think we'll have to wait for the notification to see what the fine details are.
Right. Also speaking to you about the GST, the lower GST that was being sought on food deliveries. Mr. Najib Shah, what do you think is the issue here? Of course, there is a revenue loss by states, but what are some of the pros and cons of this matter? Because the industry has been seeking clarity on this as well.
Oh, yeah, this is again a contentious issue. Notices have been issued. Notices have been, in some cases, if I remember right, adjudicated too. The GST, if any, is only on the delivery charges. Food has already, again, if I recall what the FM had mentioned in a press conference, she had all at pains to say that the food products itself will be at 5%, while the possibility of the delivery charges having to bear more than the food charges is very immense. Hence, there was a lot of debate and discussion. So I think again, this is an issue which has been deferred, isn't it? If I remember right. And
yes, sir.
So let us see the outcome of this too.
Right. Mr. Shah, now, as far as the next GST Council meeting is concerned, we believe it will take place in January. Which are the areas where you actually hope there will be some clarity on?
ATF, I only hope ATF, they do have a discussion on food delivery. And I hope also the GeoM and rate rationalization comes with some sort of an outlook as to what they plan to do. Like again pointed out by Vivek, it's not going to happen in the next meeting. But I think some sort of a focus should be there as to what the industry can expect, as to what sort of rate rationalization we're looking at. And let us see how it goes, because I think there's a lot of work for all the GMs involved.
When it comes to ATF, now most of the states, and a majority, this is what the FM said, that a majority of the states were of the view that they have very few sources of revenue, and therefore they would not prefer the inclusion of ATF under the GST. So this matter has, there was no decision taken, and there has been no GOM which is being formed on this matter as well. So, Mr. Johri, do you feel that this is a matter one can put to rest, and this is unlikely to be taken up anytime in future?
Look, you would remember that in the constitutional amendment, there is a provision to say that these 5 products, petroleum products, that were kept out of GST at that time would be brought in based on a recommendation from the council. So it does require a recommendation from the council. But as far as the revenue argument is concerned, there are many international models which could be followed to take care of the revenue implication. So one understands that states feel, that they're strapped for revenue, and this is a good source of revenue because the demand is fairly inelastic for petroleum products. But how it is done internationally is that there are many tax jurisdictions where there is a VAT kind of a tax at the base, and to compensate for revenue or to deal with the negative externalities of these products on the environment, etc., there is a top-up excise kind of a tax which is non-VATable. So in case there are concerns about revenue, I think there are solutions available. But first of all, there has, the whole issue of bringing petroleum products under the purview of GST has to come on the table. And for that, there has to be some consensus. So I think it will require some work. but there are solutions available to tackle the revenue aspect.
Right. We're taking a short break, but don't go anywhere. This discussion on the takeaways from the GST Council meeting held in Jaisalmer continue on this other side. We'll be joined by Mr. Najib Shah and Mr. Johri. Don't go anywhere. We'll be right back. Welcome back. You're watching News Center. We still have with us Vivek Johri and Najib Shah to discuss the decisions taken by the GST Council. Mr. Shah, a lot of the issues that have been before the GST Council, both on Saturday and even earlier, many of the items continue to get deferred because of the revenue implications for states. How can we address this on priority in future so that we can have some more clarity on some of the pending issues and there could be relief for the industry and the common man on some levels as well?
States definitely have very little leeway. There is no doubt about it. But that is in the scheme of things. The scope for taxation available in the states is restricted to the VAT on a few products, liquor, property taxes, and stuff like that. And I think there needs to be a greater debate and discussion as to why a particular decision is being taken. I do believe that discussions are the only way forward for any of these matters. And the states will appreciate that any reduction in taxes need not necessarily mean a loss of revenue. There could be a spurt in activity, in industrial activity. That has been tested time and again with very many commodities and very many areas. So that's how the only way I can see going forward, because the very nature of GST is such that you pool your sovereignty, you are both going to take some decisions and calls which are going to be difficult in the initial stages, but which in the longer run will benefit both the center and the states.
Right. Let me go back to Mr. Johri. Mr. Johri, on the demand by Andhra Pradesh that a 1% GST over and above the 28% rate in case of disasters be levied, just the way it was done by the state of Kerala. This is something that will be now discussed further, but the FM also had some concerns about this, because she said that one will have to see whether this will actually set a precedent and whether in the case of every disaster this can actually happen. And thirdly, what kind of disasters, whether droughts, whether floods, whether earthquakes, what kind of disasters will be put under this definition as well? So what do you think is the way forward?
I think, the concern is quite valid. And there is a need, like FM explained in her briefing, to lay down very clear parameters on the basis of which the council will either agree or, go along with a suggestion from any of the states to levy this kind of a cess. So I think it needs to be scoped quite clearly, so that there is clarity also amongst the states as and when they make a request about what kind of disasters, the scale, their magnitude, is going to result in a decision of this nature. Because if we were to allow, first of all, remember that these kind of cesses will not be vatable. So, they have a cascading effect. But I presume that if a state is going to levy it internally within its, territory, then if anything, it's going to adversely impact businesses within that state, because, they will bear, or the consumption of goods in that state would bear the brunt of those cesses. And therefore, they would be limited. And they would be, very careful in asking for this kind of a levy. The other thing is that as and when the council lays down the parameters, they will also have to think of what kind of, what kind of a tenure are they going to allow these cesses to have? Should it be adequate for them to make up for the revenue loss which they may have suffered owing to a calamity or disaster? Or should it extend beyond that? Or should it just be a standard 1 year? I don't know. I mean, I'm just laying out these possibilities. So I think the concern, to sum it up, is quite valid about having a variety of cesses across different states, because, you do have frequent floods or, droughts, or, there could be earthquakes in certain parts of the country. So in what circumstances should the council actually agree to this kind of an imposition? That is something that needs to be spelled out more clearly and needs discussion.
All right. Thank you very much, Mr. Shah and Vivek Johri, for joining us on the program and explaining us the nuances of the GST Council meeting and what to expect, and possibly some recommendations as well for what can be done in terms of greater deliberations and discussions with the state government to build consensus. With that, it's a wrap on this edition of News Centre. More news and updates when we return.